Thank you, thank you. I want to thank the Bougie Banker and Jacoby, the coolest nerd ever, giving us that great information. Now, again, my name is Daniel Gamble. I'm going to be going over some stuff to show you how to navigate these markets. It's going to be something that's simple and relatively easy to understand. The goal is to make money. So what I'm going to do is present you with the concept in which you can easily identify and use today so that you can make money Monday. That's the overall goal. Now, it's going to be simple, straight to the point. Any questions that you may have, please feel free, because this is all about money. What I'm going to show you can be used in stocks, futures, options, forex, cryptocurrency, anything that allows you to look at a chart from a technical perspective. I am a technician and a chartist, so that's why I'm able to build out different programs, trading algorithms, and things like that. I guess toward the end, we should give y'all a tour of the trading floor and show you some of my work and things that I've done for us building systems out and charting. So, to jump right into it, everybody want to know where to buy and where to sell, right? When they trade stocks or options or futures or forex. But what we're going to do is quickly go over what I call, not what I call, because what I'm showing you is basically is the foundation of the markets and how it all was created. I'm going to show you how to move through these markets and identify cycles in these markets. When I say identifying cycles in these markets, I'm showing you where you can buy and when to sell, and identify when these cycles are turning. The first thing I want to do is identify here that everything at this zero, above the zero line, is expansion. Everything below the zero line is contraction. This is based off the model of the business cycle. And within that business cycle, you have stocks, well, not particularly in this order, but stocks, bonds, and commodities. When I'm talking about stocks, everybody know what stocks is, coming straightforward. When you're looking at bonds, when I'm referring to bonds, I'm basically referring to interest rates. So as we look at this and we move along the bell curve here and we move up above, we know the interest rates are rising, and we know that at the same time commodities and things are rising. Now on this side of the bell curve here, we look for expansion as we move up, and moving on this side we have contraction. But at the very bottom, we identify what we call a valley. We go from valley, peak to valley, completing one complete cycle. So you have valley plus peak plus valley equals one complete cycle. This is important that you take note of this, because this is going to let you know where you are in the markets at all times. That's the key. The key is knowing where you are in the markets at all times. You need to know if you're going to be a buyer or a seller, or you need to know if you need to be liquidating your position and taking profit and moving on. So here, once we identify a valley, we look for the markets to move up, or your security to move up in price. After each valley, we followed by a peak, and then we look for price to move down after we identify that peak. So we should look for price to continue to move down. So if we pull up a chart and we're looking at it, we're trying to identify where we at in that cycle. If we can identify that peak, we know it follows the peak, a valley. So if you identified a peak, you therefore look for a price to do what? Move down. Once you identify the valley, in this case right here, and so we got valley, peak, valley. After each valley starts the beginning, after each cycle, you have the start of a new cycle. So we got cycle 1 going into cycle 2, If price is right here, we know we're coming in cycle 2, coming off that valley. So price should continue to increase until we get that confirmed peak up at the top and then move down. Understanding where you are is key. Now, this will cycle out this way throughout time, and it's just infinite. You just need to know where you are as the market starts to evolve. This is typically this is how you're going to look at it from a typical cycle perspective. But price doesn't necessarily move like this. Price is going to look like this when you're looking at a chart. And what I want you to do to keep things simple is identify where you are. If price is right here, in order to know where you're going, you have to know where you've been. So what you do is take a look back. And when you take a look back, you identify all the things that you can confirm. And when I say all the things you can confirm, I'm looking at this. We have valley, peak, make this valley. If price is currently right here, I can clearly see that we have valley plus peak plus valley equals what? One complete cycle. Now we identified that complete cycle. We coming off that valley. Price is going to do what? Move up and continue to move up until you hit that peak. So as long as price is continue to move up coming out of that valley, we should sit tight and wait for price to peak out. Now, when you're doing this and price continue on, we go valley plus peak plus valley, 2 confirmed cycles to the upside. How do we know when to buy or when to sell? This is the key. How do we know when to buy or when to sell? By simply identifying when you have 2 consecutive cycles pointing in one direction, and in this case up. If it's up by 1 penny compared to the previous full cycle, and when I say previous full cycle, we have valley plus peak plus valley equals what? 1 complete cycle. In that 1 full cycle on that valley here, you note the price. So in this case, let's say this price right here is $21.21. And now on the next valley, we keep this price at the forefront. Once we make the second complete cycle over here in that last valley, we want to make sure that this current valley is higher than the previous. If it's higher by the previous by 1 cent, it's considered up, and it's considered a confirmed cycle to the upside. Once you get that confirmation and confirmed cycle to the upside, you then know how to take action in these markets. And you will only take action in these areas. Here, buy, buy, buy. This is how you properly buy the dip. A lot of people talking about buy the dip, the market's down, it's a discount. Okay, that sounds good, but we need to produce results. We need to make some money. We need to pay some bills. So we need to know where to buy. Now, as long as the markets continue to cycle up, and meaning that each subsequent cycle is higher than the previous, 1, 2, 3 cycles, 1, 2, 3, and the cycles continue to move higher, you buy at each valley. You do not attempt to buy at the peaks. Now, how long should I continue to buy? How long should I purchase continue to purchase, and how long should I stay committed to this investment? The market's going to tell you when to get out of this investment. Just as you had the 2 confirmed cycles to the upside, you look for 2 confirmed consecutive cycles to the downside. Once you get that second confirmed cycle to the downside, lower than the previous, all market conditions has changed, and you should be selling all of your position not once the market confirm, but once it comes up to the peak, because markets are cyclical in nature. So therefore, when the markets move down, to give you that complete cycle, you got to have the patience and the skill and the ability to identify that next peak. Once it identify that next peak, because we are coming off a valley, price is going to do what? Move up. You don't want to be selling low, you want to be selling high. So what you would do is sell at that next peak. Once you sell at that next peak, you'll be switching sides in the markets, and you will properly start short selling at each peak all the way down. And that's how you continue to make money in these markets. Now, this is just a diagram on what you're going to be looking at. But what we want to do is look at this. Let's look at this from a, well, I'll just go to, we want to look at this from a real life position. So let's go to let's look at Apple. And then want to take a look at it from a longer term perspective. All right. This is a chart of Apple. Now, if you don't know how to read candlesticks, don't panic. I don't want you to get too confused. But what I want to do is go down here and identify these cycles from here. This was down in 2019, coming to 2020. But I want you to do valley, peak, valley, one confirmed cycle to the upside. Everybody follow me? So now we have valley, peak, valley, two confirmed cycles to the upside. So each time the markets make a valley or move down to make a valley, we should be buying. This is in 2019. Right here we have valley, peak, valley, right? At this time, we got one cycle point down, right? Now, when you got that one cycle point down, that's the heads up to be like, hey, it's a possibility the market conditions are changing. So you got to have your head on the swivel and pay attention to that previous valley, which is right here, right? But the markets continue to move higher. A lot of people making money during 2020, during the pandemic, is buying stocks. If you want to know why you was making money, this is why. Because we had two confirmed cycles from back in 2019 moving up. So if you just bought, you made money. Now, if you was doing the same thing you was doing back in 2020, I know you lost money. The money that you made, you done gave it back. So now this puts you in a situation where you can understand